Bitcoin just hit a condition that has only happened 20 times in history, and 80% of the time, price followed the same pattern afterward. Let me show you what the pattern looks like and where we are right now. On November 22nd, Bitcoin's daily RSI dropped below 26. On the Coinbase USD chart, this is a statistically rare event. Instead of guessing what comes next, I went back and studied every single time this has happened. On the RSI, I marked every time that RSI had gone below 26. Here, 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 and so on. All the way to the beginning, back in 2015. For each of the times that daily RSI had gone below 26, I tracked 5 things for each occurrence. 1, whether price eventually made a lower low. 2, the size of the bullish rally. 3, how long that rally took. 4, how long it took to reach a new low. And 5, where price reacted relative to key moving averages. All of this data is summarized in the table here. For each occurrence, I tracked the date that the RSI went below 26, what the RSI was, whether it made a lower low, percent gain to the swing high, days it took to reach the swing high, and the days it took to make a new low. I have marked all the times that price eventually made a lower low after hitting an RSI below 26 with red and purple vertical lines, while green lines are the times that price did not make a new lower low. Out of the 20 times the RSI dropped below 26, Bitcoin made a lower low 16 out of 20 times, which is an 80% probability, meaning there's an 80% chance that Bitcoin will make a lower low in the foreseeable future. Before the low, Bitcoin typically rallied about 17% on average from the swing low. The rally usually peaked around 11 days after the low was made, and the new lower low was eventually made on average 22 days afterwards. Now, let's look at where we are today. The RSI bottomed at 22.93. Bitcoin has rallied about 11% from the swing low to the swing high, and it took 17 days to reach the swing high, and we are currently at day 27 without making a new lower low. So far, this is behaving well within historical norms. Now, here's the important nuance. Of the 16 times that Bitcoin eventually made a lower low, only 4 times did it take longer than 20 days. I have marked those instances with the purple vertical lines. And in every one of those 4 cases, Bitcoin tested the weekly 12 EMA. So we'll go to the weekly chart. In each of the 4 times that Bitcoin took longer than 20 days to make a new lower low, Bitcoin tested the weekly 12 EMA, which is the white line here, before eventually making a new lower low. For example, this instance, Bitcoin made a low, tested the weekly 12 EMA before eventually making a new lower low after 20 days. This instance as well, it made a low and then tested the weekly 12 EMA and then eventually made a new lower low. This instance as well, made a low, tested the weekly 12 EMA before making a new lower low. Low, weekly 12 EMA, a new low. There's a minor exception during November of 2019 where price made a marginal lower low, completing a bullish divergence on the daily chart. And afterwards, it actually pushed way beyond the weekly 12 EMA. So go to the daily. During the November 2019 instance, price made a marginal lower low after 20 days and then soon pushed much higher. Going back to the weekly, now back to the current instance, price made a low, did not make a lower low within the 20 days on the daily chart. So we can anticipate, like the other 4 times, that price will test the weekly 12 EMA first before making further meaningful correction. Currently, the weekly EMA sits around 97,600, which aligns well with these weekly levels. So we can anticipate Bitcoin pushing towards at least 98,000 before making any further meaningful correction. Going back to the daily chart. Now, this does not mean Bitcoin must crash. It means that historically, when RSI reaches this extreme below 26 and taking longer than 20 days to make a new lower low, there is a high likelihood that there will be at least one more push higher towards the weekly 12 EMA, followed by a larger decision point, whether to continue higher or start correcting. Now, let's briefly look at whether the current instance matches the times that price did not make a new lower low. All the times that price did not make a new lower low are marked with green vertical lines. There were 4 occurrences that occurred out of the 20 times that RSI went below 26. And we can see if there are any similarities with the current situation and how the price behaved during the 4 times that it did not make a new lower low. Some of the commonalities with the times that did not make a new lower low were bottoming instances or generally flash crashes during bull markets. So this instance here was a bottoming candle. This right here was a very fast crash, 1-day candle of over 16%. But this was the beginning of the bull cycle. This was also a very fast correction during a bull market. And this instance here, 1 day, about almost a 40% candle, which was the COVID crash that flushed a lot of longs, but it was also a bottoming candle and did not make a new lower low. Now we look at the current instance. It does not seem to match any of the other instances in the past where it wasn't a very fast correction during a bull market, where it was a prolonged correction over a period of weeks. And it does not seem like a bottoming crash candle where a daily candle was over 10 to 20%. So at the current moment, it is very high probability that price will eventually make a new lower low and that we are likely in a bear market at this moment. This is a data-driven probability and statistical study, not a prediction. Now for action steps. As I like to say, information without action is meaningless. If this is a bear market, here's how I would think about it. If you're a passive investor, the best move is always to dollar cost average, especially during a bear cycle. If you're an active investor, consider taking partial or full profits if Bitcoin trades above these weekly levels at the weekly 12 EMA or potentially even higher around these weekly levels, above 100,000 and 1,000, which also aligns with the weekly 26 EMA, this red line here. And anticipating further correction, with this being a potential bear market, you can also set calendar alerts for October 2026, which is about 1 year after the high that was made, or price levels below 50,000, possibly around these levels, setting an alert right below 50,000 to resume heavier accumulation. Again, if this is a bear market, it is a potential another 50% correction before we bottom. And if you can stomach that, go ahead and keep dollar cost averaging. Or if you are an active investor, you can potentially sell above 98,000 to 100,000, 1,000. If you are a swing trader, consider longing below 86,000 around these levels with a daily order block, with a stop loss at 83,500 right below this wick low, and target longs to the weekly 12 EMA around 98,000, which is potential 14% gain, or from current levels another 10% gain or so, or with extended target around $101,000, which is about 14% gain. Action steps for if this is still a bull market, the plan changes slightly. Continue accumulating below 86,000, below these levels, and more aggressively if it hits down to 78,300, which is this weekly level. If this is a bull market, I foresee that this may be the lowest level that we approach before aiming towards new higher high. None of this is financial advice. Although this is a high probability analysis, statistics can fail. Markets can invalidate at any time. Risk management always comes first. If you found this helpful, save it and share this video. Like and subscribe, and let me know in the comments if you want more data-driven Bitcoin studies like this. Trade safe, everyone. Peace.